Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 4th of July, US Independence Day. Starting off with 88 Energy, where we've seen the bulls actually had a bit of a pie in the face last month, obviously 3p down to 1p. But the plus point at the moment is the bounce off the former October support and very strong bullish divergence with this double bottom here in the RSI window, probably the strongest one could ever see, given that that low there was around 1.5 and the second low below 1 penny. So that is a bullish divergence of the highest order. Means that we could head back towards the 1.5, 1.6 area near the 200-day moving average, even if the shares then topple over again. But just on a divergence intrigue platform, that is worth looking at over the near term. Next up, Angus Energy, where it's been a bit of a ride. I did suggest that we needed to break 8 pence, which is a line of resistance from the end of November last year. The peak the other day, 7.999. So obviously somebody else was doing a bit of charting as well. Support here at the moment, back at 5 pence, and really we need to see this range broken 5 to 8p before making our mind up in terms of where the stock is heading next. No such quandary as far as Hvivo is concerned. Here we've had the gap through the 50-day moving average last month, very severe spike to the upside. V-shaped rebound, a V-shaped bull flag is what I call it. So this is like a mid-move consolidation. And the implication is that we could at least head towards 110, 120 at the top of this rising April trend channel. Just a very interesting and a very strong looking chart there at the moment, probably back below 60 pence at the moment, the stop loss if you are cautious. Going on to a stock where a lot of people seem to be cautious for a long time, Prospex Oil and Gas, but we do have, after many disappointments, you can see most of them there from last autumn peaking around 0.8, 0.9 pence, but current formation here is of a broadening triangle. Bottom of the triangle towards 0.35 and the top, which is the implied target at the moment, up to 0.6. End of day close above the 50-day moving average, that's the blue line there at 0.44, would be a decent trigger for at least an intermediate rally back up to that 0.6 area. Regal Petroleum, one of the heroes of earlier this year, consolidating over the past, couple of months. And largely below the 50-day moving average at 19.47 pence. Had a go at gapping through it today, so far has backed off, but I think end of day close or a weekly close above 20.21 pence, and we should be back on course for the implied target here as high as 40 pence. Stop loss back at 15 pence, which is the area of the 200-day moving average and the 2018 rising trend channel. Going on to a stock which probably gave a few people a sleepless night or two, came in the form of Summit Therapeutics. Here, obviously, it's not much to chart on in terms of the recent past, but the peak after the decline was 41.9 pence. End of day close above that would be the first sensible trigger in terms of being bullish on the stock. Obviously, the RSI at under 10 is tempting. But it may be best to wait on 42 pence being broken before deciding to be a literal hero catching a falling knife. On to a stock which has basically been disappointing, drag to the downside over the last few months here. Just the first indication that we're in a falling wedge formation, and we could see the stock break out, but we need to see 17, 18 pence to break the top of that falling wedge on Tekcapital, and at the moment we are still some way away from that. Vast Resources, one of the talked about stocks of the day today, if I can type in the right EPIC code, and here we can see that the shares attempting to consolidate above the 200 and the 50-day moving averages at 0.55 pence. Probably at this stage, the safest way forward is to wait for a break of 0.65 before we target 0.8, which is what we've been targeting for quite some time. It wouldn't be any fun if we didn't look at UKOG to see where it is today, which is basically where it was yesterday. I was suggesting that the 2 pence area, former resistance, would become new support, and we tested that again today, went down to 1.9 in fact as a low. So That looks as though that would be the stop loss area if you're still a fan of the stock. A lot of shenanigans going on Twitter, but at least above the 2p area, we have a chance, however slim, of retesting the best levels of the initial July spike there for UKOG. One last stock which I covered a couple of times before, which has so far not taken off, but it looks as though it may do eventually, and that comes in the form of Velocys. You can see it broke the trend line that we had there before. But the current situation really above 10 to 12p, or in that 10 to 12p area, that looks like a support zone. You probably want to wait for the 50-day average at 13p to be broken before targeting the long-awaited move towards 20p. That's it from me. More updates at the same time tomorrow.